It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
Hey, welcome back to another episode of the Real Estate Breakfast. I hope your holidays are going well. I hope you're getting plenty of relaxation in. Yes, the downtime just to recharge the battery, because it's going to be another busy year coming up. It is a Tuesday, December the 30th, and we've got that summer series of real estate. This is our look back over the year of 2025, some of the key things that happened, and we've got another episode on the way after this.
The Real Estate Podcast wishes you and your family a fantastic Christmas break and a happy new year ahead. You're listening to the summer series on the Real Estate Podcast.
And good morning to you, Katrina. Welcome back to the Real Estate Breakfast. What do you think about being known as Australia's beachside Manhattan? You'd be loving that, wouldn't you?
I am. I do love that. And it's definitely true. It could definitely even be called the beachside LA. We've got so many kind of celebrities at the moment buying apartments in the beachfront and surface and renting them out. And we've got a lot of kind of Hollywood stuff happening. So I definitely wouldn't disagree with that.
And since we last spoke, Surfers Paradise, it just seems to have switched into this new gear. So what's going on?
I think that a lot of new developments have really started getting closer to completion instead of them just being, vacant blocks of land, that we're now looking at 6 to 9 months from them being completed, and they've really changed the look of the Surfers Paradise beachfront. There's a lot more commercial investment going into the base of these buildings. So they're offering trendy cafes and a lot more opportunity for people to live around the area and, be able to access what you usually would have to walk all the way into Cavill Avenue for.
Yeah, no doubt about it. The luxury development's certainly helping transform Surfers Paradise. As I mentioned, we've got these young tech entrepreneurs and social media stars, if you can call them that. I guess that when you have these influencers and so many of them coming and gravitating towards Surfers Paradise, what they're doing is they're showing off the lifestyle on their media channels. It's really advertising that money can't buy, because these are personal endorsements from people with a high number of followers. And when you think of the expression repetition builds reputation, that's exactly what these influencers are doing day in, day out for Surfers Paradise.
I couldn't agree more. It's the new way to market your property now on the Gold Coast. But more to the tech and the influences, an apartment in Surfers Paradise can offer a lot more privacy than what a house could back in the day. So I think they're enjoying the fact that, they're chasing the lifestyle and the location, not necessarily a big, block of land, or their priorities are shifting.
What about the demography? I guess that must be changing, somewhat, because of all of the new money and the young new money that is coming in.
Yeah, definitely. It used to be the boomers would come down and buy it as their retirement home, and it would be an investment until then. But now it's, that younger generation, that, Gen Zs, and they're now looking at it as their forever homes. And there's younger money coming in to surface where people's priorities are changing.
Now, that's something that you would have noticed, over the last few years, particularly the Gen Zs, where, somebody might make an inquiry with you on the phone. They turn up and they're looking at a luxury apartment, and you're thinking, does this person really have the money? And they turn around and say, right, let's sign the contract.
Yeah. A lot of them, they might have getting, it could be the parents are going guarantor. Two younger people, will have a much better borrowing capacity, but they're coming up with the money and they're not batting an eyelid. Like it's strange in the last 6 months how much youth and how much money is coming through the younger generations that would usually be reserved for kind of low-rise walk-ups on the other side of the highway.
At some stage, when you are a first home buyer, if you're getting knocked out continuously, you've got to reevaluate what is going on in the market at your price point. It never ceases to amaze me, Veronica, how many people can say, we've been trying to get into the property market for the last 6 months, and unfortunately, we haven't been able to buy what we want. What has that cost you in the last 6 months of going to all those opens, all those auctions, whatever the case might be, and losing property? You're losing at both ends. I think, the sooner you wake up and realise we've got to move on our price point, the quicker you'll get into a property.
It's a big challenge, and it takes some people a long time to work that out. And then, you've got to lick your wounds a bit. It's a one person fight against the market because you think all these people are crazy because they're paying more than you can afford. And, it's a very painful process to go through. We have a little free mini course that teaches people how to price a property. And in that process, it's amazing the amount of people who have done it. They come back and they're like, oh, now I realise why I keep missing out. I actually have not properly understood how to work out what the market value of a property is and how to work out what I should be prepared to pay or not, and how to work out whether or not it's even in my range, in my budget. So my business partner, Megan Wells, and I, we put it together because we have buyer's agency businesses. She's in Brisbane and I'm in Sydney. And we put this whole process together to teach people how to price property like a professional, because so many people come at it using the wrong information, relying on the wrong information, and they just come up short all the time. They don't really understand where they're going wrong. So it's really, really useful. And that's just at homebuyeracademy.com.au/free course.
And if we come back to the nuts and bolts with the agents, of course, not all agents are equal. Choosing the right one, that is such a big step, because choosing the right one is so critically important, because without full transparency on the timing, the pricing, the strategy, the seller risks costly mistakes every time.
Yeah, it's an interesting one, because obviously buyers are out there. They're dealing with all these different types of agents. Some are easier to buy from than others. And being easy to buy from isn't necessarily a bad thing for the owner. Sometimes it is, though. Some agents they pressure their owners more than they pressure buyers. And there's all sorts of stuff that goes on. And there's a real vary in the, the capability or the professionalism and the experience and expertise of sales agents. And so that one of the other things that my other business does, Good Deeds, we do vendor advisory across the country, and we find that a lot of owners were coming to us and asking questions midway through their sales campaign, saying, the agent's telling me that I've got this offer, it's the best one they can get, and I should buy it, but I really don't know whether I should or shouldn't. I should sell it, and I don't know whether I should be accepting this offer or not. I really am confused and don't understand why the campaign isn't going that well. And the problem is, of course, when you're in the process of selling a property, once you're down that path, once you've engaged that agent, your cooling off period on an agency agreement, well, there's one in New South Wales, but it lasts 48 hours. Nothing happens in that first 48 hours, really. So by the time you've realised you've made a bad decision of an agent, you're stuck.
Grab your weekly dose of inspiration to help build a real estate portfolio. We talk to the best in the business every day. Learn from the professionals and know your property with us.
All right, well, let's have a look at the mortgage stress then, which is, as you say, it is more widespread in our combined capitals and among entry-priced houses within regional Australia, offering the best affordability. So perhaps you can talk to that.
Yeah, so regional Australia does offer the better affordability when you're comparing it to our capitals. So 33% of income is needed to cover the cost of an entry-priced house in regional Australia. When you compare it to the combined capitals, that's sitting at about 47%. So there's a massive difference, 33% versus 47%. And I think, when you're looking at an isolated figure like that, nothing allows you to tell that affordability story more so than those two figures. We know that many young families, many young couples and singles move into regional Australia in order to seek the ability to make their purchase. And they are driven not only by that lifestyle, but the affordability that regional Australia offers. And, when you look at some of our individual capital cities, up there, Brisbane, 46% of income for an entry-priced house. That's how much income it takes to cover the mortgage repayments of an entry-priced house. Sydney, almost 58%. These are extreme levels. Even Adelaide, Adelaide's seen extreme rates of price growth. 46% of income is needed to cover the mortgage repayment of an entry-priced house. And when you see figures like that, what I think one of the growing segments and trends that we've seen from first home buyers is they become a rent investor. And what that means is they continue to rent in an area, high-priced market like Sydney, like Brisbane, and they purchase it in a more affordable location. And we have seen the rise of the rentvestor, particularly in a market like Sydney, and they continue to rent in Sydney, and then they look to purchase in other locations that are more affordable. That might be regional Australia, or it might be even cities like Perth, which also has a much better affordability in comparison.
Yeah, and when we're talking about first home buyers, it's amazing how many times we find in a calendar year that we're talking about Darwin. And interesting with your breakdowns that Darwin is the only city free of mortgage stress for entry-priced houses, with repayments taking up 27.7%. Tell us about that.
It is. It's certainly that tall poppy, I think, Darwin, standing out as that first home buyer location that really is much better on the budgets. And when you look at that proportion of income needed to service that repayment for an entry house, it's actually declined over the last 12 months. I think that's reflective of more subdued property market conditions overall. We haven't really seen prices do much over the past 12 months. And when you couple that with what we've, in terms of wage growth, which we have experienced quite strong wage growth, I think that is, helping to paint a much better picture overall for Darwin.
We are your local source for unbiased, expert insights into the world of real estate. We are not a real estate company. Our only objective is to help you better understand the real estate market.
I mentioned that buyers' agents, they did flood into these areas like Armidale, pushing prices to those unexpected levels. What was it about those suburbs that attracted so much interest, and why did the strategy work so well for them, do you think?
I think there was a very low capital value in a lot of these suburbs. They were very unloved suburbs in a lot of instances, not in all, but in a lot. The entry level was low, and Armidale, for example, in 2020, you're able to buy a 3-bedroom house on a full block for circa $200,000, which seems ridiculous in a capital city. But the rents on those properties went from $250 per week to $500 per week in a very short period of time. So not only did the growth outlook look really good, the yield also looked very strong.
Now, you've pointed out that the capital value growth outpaced rental increases, creating inconsistencies. Now, could that, in your mind, lead to long-term stability issues? And how do you see this playing out for investors and owner-occupiers?
Yeah, we're watching that very closely at the moment. The price levels have now stabilised in many of these areas, such as Armidale. There's still a little bit of upward pressure on rental stock, but because we have had so many investors come into the market, there's more rentals available, and there's a little bit of a flight to quality going on. So while we're seeing the median rental price increase, it's because there's more quality homes being leased, and then some of these older or less loved properties, we're seeing some rental reduction starting to occur. So what we're following now is there a secondary layer of demand? And we're confident there is. It's just a matter now of at what value level. And what we're seeing in some of these areas is first home buyers who are the traditional support of demand in these areas. They're not prepared to pay those prices yet. There's better value in surrounding suburbs.
I just want some feedback from you with regard to buyers' agents. They've moved on and values are stagnating a little bit. So what risks do you see? You touched on the investors starting to sell off, arguably selling off en masse. Could that actually create oversupply and potential price corrections? What do you think?
It could, but we're not seeing that happening. Essentially, if the investors are going to sell off, they need something else to be able to buy and something that's more attractive, and especially from a yield point of view. So we're not seeing mass transactions happening yet, or mass listings coming to market in these areas yet. And if they do, I think that would lead to a bit of a correction, but the underlying demand is still strong. We're still seeing 900 to 1,000 sales per week in Perth. We only have 5,000 total listings on market, and a balanced market is circa 12 to 13,000 listings. So I think on the back of that, plus sustained population growth, we'll have more stability, probably some price corrections in a few suburbs that were oversold, but we don't see there's going to be a mass correction.
We connect you to the best real estate information across Australia. The Real Estate Podcast.